This is Brad Sanders. This is your investment update for September of 2019. Had a good month for the equity market. The S&P 500 was up 1.9% and global stocks were up 2.1%. So pretty strong there, although a little bit volatile at times. Bonds were down a little bit, down 0.5% domestically and 1% overseas. That's to be expected after a nice run the month before. We had the Fed cut rates during the month. So the Fed funds rate's now at 2%, and they've kind of hedged language a little bit, but the Fed funds futures show that the market's expectations are that we'll be at 1.75 by the end of the year, so expecting another quarter point rate cut. And that seems to be what's guiding the markets. We kind of got a tug of war now between economic data and what the Fed's doing. And just yesterday, we're taping this on Thursday, the 3rd. We had some really bad economic data and we had a really poor market. And so there's kind of a feedback loop there. When you get the bad data, it's like, oh, the Fed's definitely going to cut now. And then you get good data and they're like, maybe they won't cut. And that's why the market is so volatile. And we would kind of expect that to continue until we get some directionality in the overall economy and we stop getting data friction there. The other thing we've been getting questions on, there's a looming impeachment trial going on. The market's largely shrugged at this so far, and history suggests we don't really know what's going to happen. We've had a couple instances of this when Nixon had his issues with Watergate. The market actually, performed very poorly. When Bill Clinton went through an impeachment trial, the market hit all-time highs. So there's not a lot of data there that can kind of guide us. As of right now, the market doesn't seem to be discounting in any real change there. So we're just going to continue to monitor that as we go forward.